This video is sponsored by Moomoo, guys. Don't forget to get up to 16 stocks from Moomoo, each up to $2,000 using that link down below. Check out all the details. You'll find them down there, or just go to stocksurfast.com/Moomoo. And with that being said, folks, cheers. Let's dive into the video. So check it out. We have a big week coming up this week, which we're going to talk about that in this video, of course. We have a lot of companies set to report earnings, and obviously the big names, the big dogs, a lot of those have already reported, but we still have some pretty big names coming up this upcoming week. We're going to break down the estimates in this video. We're going to go over the charts, what I'm looking to do with these particular names. So if you all find value, hit that like button. Feel free to subscribe, and let's dive right into it. And by the way, guys, at the time that I'm making this video, I think we're like 15 subscribers away from 30,000 subs. So if you have not subscribed yet and you want to bump us up to 30,000, hit that subscribe button if you want. I appreciate you all as always. And now let's dive into it. So you all know the markets in general, right? The S&P, the NASDAQ, they've all been selling off over the past couple of weeks, right? The indexes, the S&P, NASDAQ, Dow, Russell, you name it. And SPY broke through a key level last week, which you guys probably remember if you watch my channel, that is, guys, which you all should be watching this channel, guys. You can see SPY broke under 438, 437, which actually was support in the middle of July. Triple Q, I believe, also broke under a key level. Let me see if I zoom in on this time frame, the 4 hour. It got down to 355, which was under the 358 low from the end of June. You guys can see right here. So the selling is continuing heading into this week, guys, so keep that in mind. And we have oil. If I pull this up, oil is on a little pullback right now, but it is starting to consolidate right around the 180 SMA on the 4 hour chart. Maybe we get a pop off that point. Let's see if the breakout in oil continues. And we have gold and silver. I don't really want to break those down in this video too much, but we have gold right now sitting at 19.18 an ounce, and we have silver. Let's pull that up. Silver's at about 22.80 an ounce, actually down a good chunk from the $26 an ounce high that it hit back in May. That is a drop of around 14%. So silver is in correction territory. I believe gold is not there yet, but it could be getting there awfully soon. The high on gold was 20.85. Now it's at 19.20. It is down 8%, so we're 2% away, 2 percentage points away from correction territory. So let me jump into these stocks, guys. Let's not waste any time in this video. Let's see what the first one is on the list. I believe it was Zoom. Yeah, I'm pulling them up. I'm pulling these names up on my notes, guys. There we go. So Zoom is the first one, which you all know the history behind Zoom, guys. This was one of the darling stocks in the pandemic, right? It ran all the way to 600, and well, now it's at 60 bucks, guys. $66.29 to be exact as of close on Friday. And you can see on the 20-day chart, this thing's been downtrending. It is actually down a good chunk leading into earnings. Throughout the whole course of this month, we're down about 12%. So we were already in a bear market, guys. I mean, geez, the stock's down like 85% from all-time highs. A bear market is 20%. So it's obviously in a bear market. And just in the past couple of weeks, it's gotten itself in another correction, in correction territory again from I guess the highs from a couple of weeks ago. So this stock is going through it right now, and they're reporting earnings tomorrow or today, depending on when you're watching this video. I'm filming this on Sunday. They're reporting on the 21st after the bell. Today's Sunday, the 20th of August. So they're looking to do EPS of $1.05, which is right in line with what they did last year, $1.05. And revenue, funny enough, is pretty much right in line as well with what they're looking to do last year, or with what they did last year. And mind you, these are all estimates based on a bunch of analysts. So revenue is looking to come in at $1.11 billion on average versus the $1.1 billion from last year. So it's going to be up barely 1%, if that. So Zoom's not looking to do anything crazy. But if we do get guidance or anything out of the ordinary or something that's not expected, which could happen, I mean, it's earnings season, guys. It happens all the time. Then we might get some sort of breakout because, again, we're already in a clear bear market. deep into a bear market, and this is already down 12% in the past couple of weeks. If we get some sort of news that we're not expecting, boom, that could cause a reversal. But let's see. I don't know. I mean, time will tell. We'll see how it plays out during the day on Monday. Again, they're set to report earnings after the bell. So that is Zoom Video Communications. The next one is Lowe's, which is a way more important company that I'm looking at. Way, way more important than Zoom, guys. I mean, geez, Zoom doesn't have much of an economic moat at all. There's so much competition there. Zoom might not be around in 10 years, whereas Lowe's will definitely be around in 10 years, at least in my opinion. I could be wrong. I mean, who knows? Maybe they go out of business, but I doubt it. Any company could go out of business, guys. You have to realize that. So you can never truly say never. But this is one of those companies, guys. Lowe's and Home Depot, they're a duopoly at this point. Neither of those are going anywhere. You can't really Amazonify, if you know what I mean, Lowe's or Home Depot. I mean, a lot of people, you need to go in person and get those products. You can't really, I mean, you could order them online, certain things, but these are stores that you got to go into. And they're going to be around for a long time. There's not much competition outside. But either way, we're not going to get into that part of the, or that side of, the fundamentals in this video. I want to focus on the charts and talk about these earnings estimates, or the estimates coming up for EPS and revenue. So we have EPS looking to come in at 449 versus the 467 last year. So that is going to be down year over year, and revenue will be down as well. So get ready for that, guys. Revenue last year for Lowe's was $27.48 billion, and this year they're looking to do for the quarter a hair under $25 billion. So that will be down roughly 9% year over year, and their stock is down about $20 from their recent highs, or around 8%, 8%, right around there. So let's see, guys, what this does around the moving averages, right? Right now, we are still technically holding this uptrend that you all can see, but then again, we did dip under both the 50 and the 180 here on the 4-hour chart, the moving averages, heading into earnings, which earnings are on Tuesday, I believe. Tuesday in the morning. So they come out early on Tuesday, so be ready for that, guys. So we'll see. I mean, do we hold this trend, which right now we are, or do we end up flushing through, which would not be good for the bulls, obviously. Maybe that open up an opportunity for a longer term buy, or maybe that could open up for a longer term swing, but in the short term, that would not be good for the bulls. We also have Dick's Sporting Goods coming up this week, guys. DKS is the ticker. This is one that's been breaking out. I'm not sure if you've noticed, but we had a period of selling right here. We went from 152 roughly to about, where did we bottom out at? Looks like we bottomed out at 122, so it dropped $30, 20%, got in a bear market pretty much right there. And since that point, we've now been reversing back up, right? We're breaking back over the moving averages now. We have been the past couple of weeks. We have a golden cross. We're taking out, the highs from the past couple of weeks. We're at multi-week highs, and now we're starting to break out back towards that 150 to 152 level, which you guys can see that's actually putting us in a triangle, an ascending triangle, which is really bullish. So DKS, guys, they're looking to do EPS of 381 versus 368 last year, so that's good. Going to be up about 13 cents projected. And revenue's looking to come in at $3.23 billion versus the $3.11 billion from last year. That would be up around 3.9%. So they're looking to report on, let's see, I think Wednesday, or they're on Tuesday as well, guys, 22nd in the morning. So watch out for DKS. It's breaking out, building a lot of momentum. I think this is a nice play right here, especially if earnings crush it and it starts breaking out of 150, 152. This could be a momentum play, in my opinion. Toll Brothers, TOL, another one that I'm looking at, luxury home builder, guys, which, talk about performance. Holy crap, this stock was at $45 back in December. Now we're pushing 75, and it was at 84 back in the middle of July, about a month ago. So Toll Brothers is up a ton this year, no doubt, and they're looking to report, I believe, on Thursday. No, they're Wednesday. Oops, I'm sorry, guys. Wednesday morning, the 23rd, Toll Brothers, we have them reporting, and they're looking to do 281 EPS versus 235 last year. Okay, that's going to be up. That's awesome. And they're looking to beat, or not beat, but be up year over year on revenue. Revenue is expected to be $2.41 billion versus last year's $2.26 billion, which would be up around 7% year over year. And now we actually are seeing a bit of a not a sideways channel, more of a downwards channel here. But we can see that, boom. We've been chopping around, slowly moving down over the past couple of weeks, and we are a little bit more oversold now heading into earnings. Maybe we get some sort of break back towards, 80, low 80s, high 70s. Let's see, guys, how that plays out here on TOL. And you all know the housing market right now, which we're not going to get into in this video. It's an interesting place. Let's just say that. Interest rates are high. Mortgage rates are high, obviously. Supply is not really there. People that are locked in on their 2-3% mortgage rates, why would they want to sell? They have a 30-year fixed at 2-3%. Why would they want to sell and then get locked in at 8% on a new property? So no one's selling. Supply is not there. Demand's definitely there. Interest rates are high. What the heck's going on, right? What the heck is going on? But I'm not a real estate expert, obviously, so we're not going to get too deep into that. But I do read about the space. I do know a little bit about the space. And, I track it, obviously, and it's crazy what's going on out there. And eventually, I do want to buy a home. That's something I've mentioned here on the channel, barely, but I've mentioned it sometimes. I'm in the not in the market right this second, but it is a 2-3 year goal, or even a 1-2 year goal ideally. It really depends on how the market plays out. That's kind of what I'm waiting for now, my fiance and I. But either way, that's a whole other topic for a whole other video. Toll Brothers, watch out for them. TOL, guys. And Nvidia, of course, which I talked about in my video yesterday. NVDA is the ticker. They're also reporting earnings this upcoming week. If you guys want to see a more in-depth video on Nvidia, the earnings, the numbers a little bit, go check out that video from yesterday. We covered it more in depth. I think it was the second video from yesterday. It should be the video before this one that you're watching. So go check out Nvidia. We break those earnings down a little bit more. But you guys know they're growing like crazy. EPS last year was 51 cents. They're looking to do 207 in this quarter, which is nuts. And revenue last year, guys, was $6.7 billion, and they're looking to do $11.17 billion this go around, which is crazy, up almost 70% year over year. So Nvidia's on, I believe, Wednesday after the bell. So that's the 23rd. All right, let's see what Nvidia ends up doing. And we also have Snowflake, guys, SNOW, which is down 25% heading into earnings, which I believe they're on Wednesday as well. Yup, after the bell. So Snowflake's looking to do 10 cents versus the 1 cent, the penny from last year. So that's good growth year over year on EPS. And revenue's growing as well pretty nicely. $662 million versus almost $500 million from last year. That is up 33% projected year over year. And keep in mind, this stock is collapsing. It is. We're not seeing any signs of a reversal. We are under the moving averages. We are seeing a death cross, but this could open up a crazy opportunity if they do well on earnings and we get something that we weren't expecting, maybe better guidance. We'll see. I mean, this thing's down 25% heading into earnings on Wednesday, guys, and this is a stock that tends to move a lot in either direction on earnings, which is why we're watching it and why I'm covering it right now. And by the way, if you're still watching the video, if you stuck till the end, hit that like button. I appreciate you all as always. And don't forget, we're like 10, 15 subs from 30,000. If you have not subscribed yet, hit that subscribe button. I appreciate you all as always. And the last stock for the video, folks, is Dollar Tree, ticker symbol DLTR, which has been moving sideways all year. You guys can see it's been a pretty wide range, but it's been between 135 to 160 all year, and now we're moving more towards 135 to 140, right? You guys can see that right here. We're starting to sell off. So Dollar Tree, they're set to report, I believe, on Thursday. Thursday morning. They're looking to do 87 cents. Brace yourselves for this, guys, versus the $1.60 from last year. That is just ridiculously awful EPS-wise, but revenue is going to be up year over year. Last year they did $6.77 billion, and now they're looking to do $7.18 billion, up 6.2% year over year. Not bad. So this is one that's moving sideways again, more towards the bottom of this range. Let's see if we do start coming down more towards the 130s. If so, this would be pretty interesting. Heading into earnings, maybe even after earnings. And keep in mind, right now we're in a multi-day, multi-week downtrend, and we're not reversing quite yet. So be mindful of that. Watch out for the reversal, guys. That's what I'm personally doing. So with that being said, I'm going to wrap up the video. If you have not gone up to 16 stocks yet for Moomoo, what are you waiting for? Use that link down below. Open up your account and fund it with at least $100. You get 5 stocks right off the bat. And fund it with at least $1,000. You get 10 more stocks, totaling 15 stocks each, up to $2,000. And fund your account at least $5,000 for a limited time, guys. The clock's ticking. Even though I don't have a watch on, you get another free share of either Tesla stock or Expedia stock on top of those 15 stocks you already got. So get on it. Use that link down below, and make sure to follow me on Twitter at StasserFest or Stas Talk Stocks. You'll find me on there. And with that being said, folks, cheers. I'll see you later.